Forget everything you think you know about managing your money. The biggest revolution in wealth isn't coming, it's already here, and it's powered by artificial intelligence. For decades, the financial world operated on human intuition, complex calculations, and insider knowledge. But those days are quickly fading. We're standing at the edge of an AI-driven financial revolution, a seismic shift that's about to redefine how we earn, save, invest, and even protect our money. This isn't some far-off sci-fi fantasy, it's a rapidly evolving reality poised to reshape the financial landscape as we know it. The real question isn't if AI will impact your wealth, but how and when it will hit your personal finances. What you do in the next few minutes could decide if you sink or swim in this new financial tide. Let's start with the good news, the incredible opportunities AI is unlocking. Imagine a stock market where decisions are made not by gut feelings, but by algorithms that can process more data in a second than a human could in a lifetime. This is algorithmic trading, a field dominated by sophisticated AI systems that constantly analyze vast datasets, from global news sentiments and economic indicators to microtransaction patterns. These systems identify profitable patterns and execute trades at speeds and scales impossible for humans, literally fractions of a second. We're talking about high-frequency trading firms leveraging AI to make millions of trades daily, consistently beating human traders. For those who can harness these tools, the potential for higher returns is undeniable, turning the market into a hyper-efficient, digital battlefield. For example, some quantitative hedge funds using AI have reportedly achieved annual returns significantly outperforming traditional funds, simply by letting the machines do the heavy lifting and pattern recognition. Then there's your financial advisor. Or, perhaps, your future financial advisor. AI is revolutionizing wealth management through the emergence of robo-advisors. These platforms offer automated investment portfolios tailored precisely to your individual risk profile and financial goals. Want to save for retirement? Buy a house. Just punch in your details, and the AI builds and manages a diversified portfolio for you. The kicker? They often boast significantly lower fees than traditional human advisors, making sophisticated financial planning accessible to millions who might have been priced out before. Consider companies like Betterment or Wealthfront, which manage billions of dollars for everyday investors, all with algorithms that rebalance portfolios and optimize taxes automatically. This isn't just about saving money, it's about democratizing access to expert-level financial advice. But AI isn't just about making money, it's also about protecting it. Fraud detection and risk management are areas where AI is truly a game changer. Every time you swipe your card, make an online purchase, or transfer money, AI algorithms are silently analyzing those transactions in real time. They look for anomalies, suspicious activity, and patterns that scream fraud. Where traditional methods might take hours or days to flag something, AI can detect and prevent financial crimes almost instantly. This means stronger security for financial systems, fewer identity thefts, and ultimately, more protection for your hard-earned cash from potential losses. Major banks report preventing billions in fraud annually, largely thanks to AI's ability to sift through mountains of data and identify the needle in the haystack that a human might miss. However, like any powerful force, AI casts long shadows. As much as it offers opportunities, it introduces significant challenges and risks that we simply cannot ignore. First, let's talk about market volatility. The same algorithmic trading that promises higher returns can also amplify market swings. Imagine a glitch in a single algorithm, or a chain reaction where multiple AI systems interpret the same data in a way that triggers mass selling. We've seen flash crashes in the past, where markets plunged hundreds of points in minutes, partially due to high-frequency trading. The risk now is that if algorithms malfunction or are exploited, rapid, widespread losses could occur with terrifying speed. It's like having a flock of robot birds, all programmed to react to the same signal, suddenly deciding to fly into the ground. When these systems are interconnected, a small error can ripple through the global economy, causing immense damage before any human can even react. The Wall Street Journal has reported on studies suggesting that while algorithms improve market efficiency, they also contribute to the speed and severity of market corrections. Then there are the limitations of those convenient robo-advisors. While they're great for straightforward investing, they often lack the nuanced understanding and emotional intelligence of a human advisor. What happens when you're facing a complex life event, a sudden inheritance, a difficult divorce, or starting a unique business venture? An algorithm, no matter how advanced, might struggle to factor in the emotional weight, the unspoken family dynamics, or the intricate tax implications that a seasoned human professional would instinctively grasp. During market downturns, a human advisor can offer reassurance, explain the long-term strategy, and prevent panic selling. An algorithm just executes its pre-programmed rules, which might not always feel right when your portfolio is bleeding. And here's the one that keeps many up at night: job displacement. AI-powered automation is not just replacing factory line workers, it's coming for roles in finance. Think about customer service, where chatbots are already handling inquiries. Consider entry-level financial analysts, whose tasks of data gathering and report generation can now be done by AI in seconds. Even some aspects of auditing or loan processing are being automated. A study by the World Economic Forum predicts that tens of millions of jobs will be displaced by AI globally in the coming years, with many in the finance sector. This isn't just about lost jobs, it's about the potential for increased unemployment, widening economic inequality, and a fundamental shift in the skills required to thrive in the workforce. Are you ready to retrain, or will you be left behind? Finally, the vast amounts of data AI systems require create a colossal target for cybercriminals. Data privacy and security are becoming paramount concerns. Every bit of your personal financial information, your spending habits, your investment choices, your income, fed into an AI system is a potential vulnerability. The threat of data breaches isn't just theoretical, it's a constant reality. We've seen massive breaches at major institutions in the past, and as AI systems become more central, the potential for misuse of your financial information by bad actors only grows. Your digital financial footprint is growing, and with it, the risk. So, what does all this mean for you, and how do you prepare for a future where AI is so deeply woven into the fabric of your wealth? It requires a proactive approach, starting today. First, educate yourself. You don't need to become a coding wizard, but understanding the basics of AI and its applications in finance is no longer optional. Read financial news, listen to podcasts, watch videos like this one. Just understand the tools that are shaping your financial reality. Knowledge is your first line of defense and your biggest opportunity. Second, diversify your investments, and not just in the old-fashioned way. Spreading your investments across different asset classes, traditional stocks and bonds, real estate, even alternative assets, mitigates the risks associated with market volatility, especially when that volatility might be amplified by AI. But also, consider diversifying how you invest. Don't put all your eggs into one AI-powered basket or rely solely on traditional methods. A balanced approach is key. Third, stay informed. The pace of AI development is breathtaking. What's cutting edge today could be obsolete tomorrow. Keeping abreast of the latest developments in both AI and finance means you can adapt, seize new opportunities, and sidestep emerging threats. This isn't a one-time task, it's a continuous commitment. And finally, consider the ethical implications. As investors and members of society, we have a role to play in supporting the responsible development of AI technologies. Be aware of the potential societal impacts, advocate for transparency, and question systems that seem opaque or unfair. Your voice matters in shaping the future of AI and finance. The AI revolution isn't coming, it's here, and its impact on your wealth will be profound. It offers incredible tools for growth and efficiency, but also presents real, tangible risks to stability and security. Understanding these opportunities and challenges is absolutely key. By educating yourself, diversifying wisely, staying informed, and considering the broader ethical landscape, you can navigate this complex new world, not just survive it, but thrive within it. Don't let your wealth be a casualty of the AI era. Position yourself to be a beneficiary. Want to know how to specifically use AI to pick your next winning stock? Check out this video right here.